Working on the management and asset managing asset with property management is two different things. What's your day-to-day like involvement?
I'm about as hands-on into property managers as I can be. I know the ins and outs of the business. We have weekly meetings, especially through the renovations. We go over 4 reports. We go over our unit availability, our work orders, the delinquency report. Last report is the lease expirations.
Hello everyone, and welcome back to another episode of Path of Progress. I'm your host Alex Kononov, and today's guest is someone who brings a grounded, hands-on approach to multifamily investing, Hayden Duer. Based in San Diego, Hayden manages his family's real estate portfolio and has recently made a strong entrance into the multifamily space. He's raised over $1.4 million from private investors and currently owns and operates 44 units across Tucson, Arizona and Kansas City. We are going to deep dive into the deals, the numbers, and how Hayden made the leap from family management to running his own multifamily playbook. Hayden, welcome to the show.
Thanks for having me, Alex. I really appreciate it.
Oh, it's a pleasure. Listen, I appreciate people like yourself starting and focusing on multifamily, changing trajectory of their, past and moving forward to something new and exciting. Listen, for those people who don't know you, let's start from the beginning. How did you discover real estate, or real estate discovered you?
Yeah. So real quick background, I have a family portfolio. So my grandpa invested in real estate and my dad invested in real estate. And so I personally own and operate that family portfolio with my dad currently. And now I'm building my own portfolio that will just kind of keep growing as the generations keep going. And our plan is to continue to set up a smooth transition from generation to generation so we can continue to build the family wealth. So that's kind of the brief background of where that's at. We own single family, office space, retail, and now I've kind of branched off into the multifamily sector. So that's kind of where I got the inspiration to get into real estate. And so I finished college back in 2018. I asked my dad, how do I get started? What do you suggest? And the first thing he said was learn from the ground up. So I started in maintenance, working for a property management company in my hometown, and worked my way up into the office, leasing, assistant manager. Then I became a manager of apartment buildings of 150 to 300 units in San Diego. So really got a really good grasp on management and asset management and property management. And that's why it kind of gave me the spark to want to buy multifamily, because I understood it. I understood how to manage it and run it and operate it to its full potential. And so that's where I'm at today. And as you mentioned, we purchased 44 units over the last 15 months. We really dug in about a year and a half ago and started to purchase multifamily, and we're ready to grow from here.
Awesome. Listen, let's rewind a little bit. It's all started from grandpa. I mean, great man, great history, and right choices lead him to where you guys now are as a family, and in a very strong position. And can I ask you this question before you started and ask you that about, hey, how do you start in real estate? You were surrounded from this environment, right from the childhood. You kind of running around. What was your exposure when you were a kid to real estate? I'm just curious.
Yeah, a lot of tapping my dad on the shoulder while he was on the phone. A lot of phone calls. So my dad back in 2008, so he had a small portfolio. My grandpa and my had a small portfolio. He was a pharmacist, purchased a few properties. And then my dad, back in 2008, he owned a local glass and screen company in my hometown. And he owned the building that had about 5 retail spaces in it. And he started to really research and dive into real estate investing and got deep into the Robert Kiyosaki wormhole, and realized that he could get more in rent than he was making every single month in his job. So that next day, closed up shop, sold his business, and put a tenant in there, and then just went to buying single family first, then branched out, bunch of strategic refinances and strategic, monopoly game that led him to where he's at today. So that was kind of my entrance into real estate, seeing him go through that whole, from start to 1031 exchanges to how to manage, how to own, because he manages his own portfolio, and that's when I just started taking over about 5 years ago. So we've really kind of transitioned everything into me doing it. So I learned a lot from just watching him do it day by day and listening to his fundamentals, his philosophies, and that's kind of where I've got my groundwork for real estate investing.
And I guess excitement too, right? Because usually some kids, when parents are busy on the phone and always work, they start resenting that kind of work, right? But it's kind of still excites you because you saw the opportunities there, potential. And I think that's important to pass on our kids at some point in the future, right? Our own families.
Yeah, he's no, we're no geniuses, right? We're just your everyday people, and he was able to build the legacy that he's been building, and it's been a short period of time. I mean, 2007, 2008 was really when he got started. What is that? 15 years, about 15, 16 years is really all it took for him to build the legacy that we have today, and I'll continue that on.
Okay, so really good history with your family, and appreciate you sharing it. I think it's important to know where you're coming from. So listen, let's talk about your experience first working for someone else, property management company. How long did it take you to become a manager of 150 units, like you said, in San Diego? And what was that experience for you?
Yeah, good question. So I started as a maintenance technician. So I just, was going in and unclogging toilets, doing a bunch of, all the nitty gritty work for a local property management company. I learned a lot, learned how to work with my hands, learned everything you need to know about, how long things take, how much should cost, or, how much things should cost, so on and so forth. And then from there, that I did that for about it was like 8 months, about 8, 9 months, and then got into leasing. Did a lease, worked for a property that was 250 units. So leased apartments and worked there for about a year. And then I worked as an assistant manager for about 10 months. And then I became a manager. And that assistant manager was another 250 unit deal. Then worked as a manager for 190 units. And then from there, I helped properties within the portfolio in San Diego for that project, or for that company, and managed several of those types of properties.
So you weren't kidding when you said you started from the ground up.
Yeah, yeah. And in total, it was 6 years of property management in total before I broke off into my own.
Wow. I mean, that's a really good track record. Now you have your experience, not only from owner operator, but also from maintenance standpoint, from leasing standpoint. You can see what the issues could be there. And what kind of assets did you manage? Was it Class A buildings or more like a vintage kind of style?
These were Class B or C to B in San Diego, and just kind of, some of them were in the 60s builds, some were, and then a couple of them were 80s builds. So bigger apartment styles, and really got a full scope of how to lease, how to manage, how to operate, how to fully optimize a property, which was huge. And it's paying dividends now, which has been great. Because one thing, again, I go back to a lot of things I learned growing up. One thing my dad always taught me was, when I was getting into it, go get paid to make mistakes, right? And so I went in with the mindset of, I'm going to be a real estate investor forever. So, and a real estate operator and owner forever. So I need to learn everything there is to know. So that was the lens I had as I was, every day in maintenance, every day in management and leasing. So I asked those types of questions. I worked with asset managers and asked to my regional managers, asked questions that I had no business knowing, being a property manager, but I wanted to learn more, and I wanted to learn every aspect of the business. So that really helped and paid dividends for us.
I like it. So even though in your darkest time, in your very beginning, when you plunge in your toilet, you still have eyes on the prize. On one day, I'm gonna own the sin by myself,
Yeah,
and
no,
it's gonna
absolutely.
be just a different time.
Yeah, I spent, I worked from 8 to 6, or 9 to 6, and then I spent from 6 to 11 eating dinner and on YouTube and studying and everything under the sun. So I got a world's worth of knowledge in just those 5, 6 years.
Oh,
I still
absolutely.
do all that to this day, but. Yeah.
100%. So what was the tipping point when you decide, okay, I'm done with managing, let me try to do my own thing?
Yeah. Well, at a certain point, I got to the point where I was like, well, the amount left that I have to learn about property management is I can learn on my own. I'm comfortable with making, if I am to make mistakes, I'm comfortable with that. But I also have the connections within the industry. If there are questions that come up, I can make a phone call and answer the question in 5 minutes. So I said, you know what? I want to get in, sooner rather than later. And so that was the mindset shift for me. I said, I'm not learning as much every single day. I'm not learning a whole lot. I'm just kind of proving the concept every day. I'm going to go do this on my own now. And if I ever have questions, I have a team of amazing property managers and regional managers and people in San Diego that I could go have a coffee with and learn 50,000 more things if I needed to. So I felt comfortable owning my own projects after that.
I love it. So at some point, you just basically hit your ceiling on the knowledge, how much you can more extract from this venture, and you're like, okay, I'm ready to go, and I have contacts to do it on my own,
Yeah.
and it's a natural next step. I love it. So let's talk about your first multifamily deal.
Yeah.
How did you find it? Let's start from that.
Yeah, so I found that through broker relationships. I called. I say this all the time. I spoke to property managers every day, or not property managers. Gosh, I spoke to brokers every day and called same brokers at least once a week, bugging the crap out of them for a long time, and let them know how serious I was. And every deal that was on the market, I underwrote every deal that within the markets that I was targeting, and until we executed, and I've continued to do that today. So I found that through broker relationships and through just going out to the markets that I targeted, and that's really where I started.
Okay, so how many units was your first deal,
First deal was 10 units.
and the location of it?
Yeah, that was in Tucson, Arizona, just close to downtown and close to the University of Arizona.
Very cool. So, how far is it from where you are physically located, and why Tucson, Arizona?
Yeah, so I live in San Diego. It's like a 5 hour drive from San Diego to Tucson, or about a 45-minute flight. So that was really why we picked it. With our strategy of our target markets, we target assets that can cash flow from day one, and that we feel comfortable going in, and the project makes sense from day one. So that was really why we felt comfortable targeting Tucson rather opposed to Phoenix or San Diego, where those markets are a little more cyclical, and there's a big swings in those markets, or bigger swings in those markets. That's why we really honed in on markets like Tucson, and given the fact that it's an hour away, we can get there in less than a day, and take care of any issues in case of emergency.
Awesome. Yeah, that makes sense. Now, tell us about the numbers. How did you buy it? Did you save enough money from your W-2 job and you just put your own money? You say we. Do you have partner on those deals?
So yes, I do have a partner. We put in 10% of the capital that was needed, and then we're a little over 10%, and then we raised an additional 650,000, or I guess 600,000 is what we raised. So we put together a syndication, and we raised from friends and family and our network for our first deal.
So how much did you pay per unit on that deal?
So we paid 130,000, just over 130,000 per door. So it's 10 units. We paid 1.34 for the project, and the expected exit, or the projected exit, is about 2.2, a little over 2.2. In hold period is 5 to 7 years on this deal.
Okay, and was it a value add deal? Like, was it
Yeah,
much
this
deferred maintenance?
so we 6 of the units were renovated, full gut renovations. So we went in, and they were in the middle of renovating 2 of the units, and when we purchased it, they finished those 2 renovations, and then we finished them, but the seller paid for them, and then we did the final 2 renovations. So we raised money for the down payment, for the closing costs, and then additionally for the remaining renovation budget. Yeah, it was value add. We ended up doubling the rents, so the rents were around 650, $700, and now they're on average about 1375. So
Very cool. And how did you finance it?
we financed it. It was actually seller financing, and we're going through a refinance as we speak. So we bought it a year ago, just over a year ago, about 15 months ago, and we are refinancing right now. But we had a seller finance at interest only, 6% interest only loan for 3 years, and there was an option to pay 10 grand for an additional year. But right now we can give money back to our investors, about a third of their investment, keep the cash flow around the same price, or around the same percentage, excuse me, and stabilize for 5 6 year or 5 to 7 years moving forward. So we're deciding to move forward right now with the refinance, and yeah.
Makes sense. So did you get appraisal already for it?
Yeah, we got an appraisal, or actually we're in the midst of getting an appraisal. So there's nothing in concrete, but we've got some.
No final numbers yet. That
Yeah.
you're still working on it. You still get into the final. Okay.
Yeah.
And what kind of rate does a lender give you for their finance?
Right now we haven't locked anything in, but right now it's just over 6%. It's at 6.05%, and it's interest only for 5 years. So we'll after that loan, or within that loan, we'll exit on the property. So it's interest only, similar style loan, no prepayment penalty. So it was a great product, and very similar to the one that we have currently, just kind of extends it further. So
Yep.
we're happy about it.
No, good stuff. And you cash out some of the investors, at least some of the equity, so they're happy about it. Chips off the table, and you move on to the next one.
Exactly.
Love it. Okay. What was your next deal?
Yeah, our next deal we just purchased in June. So right now we're middle of September, so we purchased at end of June. It's a 33 unit apartment building in Kansas City, Missouri, and we're converting it a 1 unit into the 34th unit, the laundry room in a 34th unit. So in total, it'll be 34 units. We purchased that deal just over $2 million, $2.05 million. It's 34 studio apartments in north of downtown Kansas City.
Wow, studios, huh? So how much did you pay for it?
Yeah, so we purchased this property at $2.05 million. So we got it at a really good basis. Typically, we, as you mentioned, studios, typically we don't like buying a property with smaller units or solely smaller units, but we felt comfortable with the basis that we got it at, just over $60,000 a door. And, there's a proven path to value add where we're going to go in, renovate, kind of make the exterior a little more vibrant, work on the curb appeal, and really improve the value that way. So, and there is a demand, given the location. We're just north of downtown. The path of progress in Kansas City is going towards that way. And also, one of the final 2 locations for the new Kansas City Royals stadium currently is just a couple miles from this project. So not that we were counting that into our underwriting, but if that does happen, things will look up for sure. We might be looking to sell a little sooner than we thought.
Awesome. No, that's exciting for sure. And also timeline on this, 5 to 7 years?
This one's 4 to 6 years. So we're renovating. There's a little bit more deeper of a value add. So we're renovating all 34 units or all 33 units, and converting the 34th unit from a laundry room into a unit, and adding laundry into each unit. So we're taking rents on this particular project. When we closed, rents were $656 on average for the studios. We just rented out our first renovation at $850. So we're
Nice.
we're about $200 delta between where we're at to target market rent.
Very good. Good for you. This is really exciting stuff that's going on. And how did you finance this? How do you have scheduled your equity stack? Like, what did you do on how to close on it?
Yeah, so this one we put together another syndication, family, friends. We're starting to run out of family and friends, great family and great friends, but we're starting to run out of them for our next deal. So that's next on the ticket. But for this deal, we got a small local commercial bank loan on the property, 2 years interest only, and then at just under 7% on the interest rate. But it's in total, it's a 5-year term. The local commercial bank really liked this deal, so they're very flexible with their terms and they really want us to work with them and hopefully eventually refinance with them. So we decided to build the relationship with this bank, and we've been building the relationship beforehand before we got into our first deal. But now that we've closed on a deal, we really want to continue that relationship. So that'll be important for us as we move through our business plan. But we finance 75% loan to cost. So of the entire renovation and the entire down payment on the property. So 25% we put down on the project plus closing costs. So that came out to, we raised just under $750,000 for that raise.
Really good rate for bridge.
Yeah.
7%.
Yeah. It was really, really great.
I think it's around 9% right now for bridges.
Yep.
This is a normal rate.
Yep.
What you got is just a local bank. Very cool. So how did you find in the first place this bank? Did you approach them before that, hey, I'm working on looking for the deals, we trying to build a relationship, or you just jumped the gun after you got LOI submitted for this property and you just call all the commercial lenders in the area?
Yeah. So good question. We've set up both our markets, Tucson and Kansas City, with a full team before we ever decided to jump in. So we went out to the property before we decided to jump in and put in LOIs and get into deals. So we went out knowing how important property and asset management is, knowing how important your loan is and your lending team and brokerage team. We met personally, shook hands with our teams, interviewed each team member, and put together that team strategically. So before we established this relationship just over a year ago, almost 2 years ago now, with this banker. And this was through when I started calling brokers. Brokers know everybody in the market. So they know lenders, they know property managers, they know particular property managers for particular properties. So we felt comfortable with the brokers that we were talking to because we met them and spoke with them quite a bit. We as in me, I guess, because I was doing that. But then we went out to the market, set up our market, shook hands and met with everybody. So this relationship has been matriculating for quite a while. We had a submitted LOI about a year and a half ago in Kansas City. So we were talking to this broker, this bank beforehand with that property. And then that one fell through. And so we felt comfortable with this guy and really we're glad we could execute with them.
Awesome. No, good stuff. And it makes sense. You started relationship, you priced one loan, you just kept in touch, and now hey, this is a deal that we actually closed with them. Now you're nurturing that relationship in a meaningful way, and they're looking forward for more deals with you.
Yeah.
I like it. And so tell me, how do you manage those units? So do you guys self-manage, or do you have hired local property manager for those?
Yeah, given where we're at with our portfolio, given where we're at with in location, we decided to go with a third-party property management company for both deals. So we vetted several property management companies that we got through referrals, through our own research, met with them personally, met with them over the phone, and just kind of went through a full interview process of each of our property management companies. And then once it was time to close on a property, we matched the property and kind of the play that we were doing, the value add play that we had with each property, with the property management company that would be most appropriate, that we felt could execute the best. And so we had a pretty strategic approach with that third party property management company. And eventually, as we plan to scale and we plan to grow, we will be putting in property management companies in these markets that best fit our company and where we plan to grow. So we do plan to do that eventually, but as of right now, third-party property management company was the best play for us. And so that's where we got those companies. And for the Kansas City deal, the property management companies also, they have a construction arm. So it was very easy to put two and two together and work with them and kind of streamline the whole process. So we felt comfortable with them.
Because, I agree what he's saying. New markets, you're not there physically, you can be, so it makes sense actually to put third party management. But working on the management and asset managing asset with property management is two different things, right?
Oh yeah.
So can you invite for us, what's your day-to-day like involvement? Are you hands-on or more like high-level asset management operations?
I'm about as hands-on and annoying to property managers as I can be, but I preface it with, hey, I know the ins and outs of the business with my property management company. So they're very comfortable with me, and they appreciate the fact that I know what their day to day is like. So what I do is I we have weekly meetings, especially through the renovations, through when we're doing our value add projects. We have weekly meetings with operations and project management with our property management team, and we go over 4 reports. We go over our unit availability. We go over, so that gives us kind of a broad sense of where our property is today and where it is over the next 60 to 90 days. We go over our work orders. So we're making sure that we are attacking each work order as quickly as possible. If not, calling our tenants, making sure we have the hands-on approach. And then we go over the third report that we work on is the delinquency report. So we look at who has paid, who has not paid, and what our plan is to get paid. And that way we can also determine our renewal strategy, which leads me to my last report that we look over is the lease expirations. So we make sure that we are fully in line with like I mentioned, where our project is today and where it's going. And that's huge when you're going through a project and renovating the units, because you need to know who's paying, who's not paying, whose lease is coming up, how many leases are coming up, and then also time that with the market, because there's leasing cycles from typically, like in Kansas City, the leasing cycles go from late February, early March through about right now. It's kind of slowing down for the winter. So we need to make sure that we align everything properly. So we're very hands-on to answer long-winded answer to your question.
Are you hands-on on construction side too?
Yeah, my partner's very hands-on with construction. So he's going in and he's making sure that we have everything ordered on time, making sure that we have the best prices on everything, and making sure that we're going through our full diligence, every single unit, every single exterior project that we're doing. So he's just as hands-on as I am on the project side.
So yeah, I got it. So you mostly focus on operational side, on property management side, on a physical occupancy, on economic occupancy, and on a maintenance kind of general overview. And your partner is mostly on value add product there. I like it. You guys have good synergies here. So tell me this, from your past experience working for property management company, you probably were on these calls with owners like yourself nowadays, right? Have you learned anything in particular that you want to take away? And hey, when I'm gonna be an owner, like today, I'm gonna do this and ask those questions, and I'm gonna have this checklist. Have you took anything from that time?
Yeah, absolutely. I've spoken with owners of these larger projects. I've spoken with owners who are doing similar things that I'm doing with syndicating projects. And so, yeah, I've definitely learned. And from the lens that I took, on those calls, I asked probably too many questions to learn and take away as much as I possibly could. A big component of that is, how important management is, and how important, and being a manager and learning how to optimize a property and learning how to, optimize every inch of a property. It really helps you with the whole scope of the project, from underwriting to raising capital to managing these deals. So yes, I definitely, those are kind of the major things that I learned, and how management can bleed into everything. So that's kind of the lens I have.
I think this experience is invaluable. Whatever you got already under your belt, this is like very unique value proposition for new investors who don't know you, out of your friends and family circle. You have something to show for, you have experience to share.
Yeah.
Most multifamily investors, they don't have this stuff, especially the ones that jump from 0 to 100 units overnight, and they just they don't know what's going on a management side.
Yes.
But you have this. So for young people who just starting, or generally whoever starting in multifamily, what would your piece of advice? Go like yourself, try themselves and get this experience from the trenches, let's put it this way, or go right away to multifamily asset management?
Yeah, what I would say is, whatever you're doing, learn a skill. There are a few major skills within a syndication deal. Raising capital is one. Property management or asset management is another. And then construction management or project management is another. And then, accounting and all the back end stuff is another role. Those are kind of the major roles. There are several other roles, but those are the major roles within a syndication. So getting skilled in at least one of those areas, and then just building off of those skills. Right now, raising capital is one area. Now that I've got the asset and property management very focused and very systematized, and I'm proficient in it, raising capital is another area that I plan to provide value to deals. Building those skill sets, finding deals, underwriting deals, there's another major roles. And so learning those roles and partnering with people early on who have experience and who have made the mistakes. Again, getting paid to make mistakes, or getting paid paying others who have made the mistakes and learning from them, I would say is one area or a couple of areas that I would heavily focus on if you plan to get into this business. And if you want, last thing I'll say is, if you want to grow a large business and you want, 1,000 doors, 5,000, 10,000 or more doors, you really have to set a foundation, and you really have to know at minimum one skill set, every last facet of it. So doing that early on and starting small, building at that area, building at that level is crucial. And because you can make mistakes at, 100,000, couple million, maybe $1 million raise or $1 million mistake, right? You can make mistakes and still recover. But if you're at the 10, 15, $50 million range, 100 plus units to your point, and you make a mistake, you're going to be out of the industry like that. So, yeah, that's what I would recommend.
I think the bottom line is just to get experience, regardless. Choose what your strengths, right? And focus on that. If you like talking to people and just networking, maybe raising capital would be a good niche.
Yep.
But I think even though if you even raise capital, you still need to understand the basics. Underwriting, you have to know. Management, you have to get an idea of what to do. So you have to get some experience on that front and be hands-on. You have to be hands-on. You have to understand ins and out. And for you personally, I think you provide a really unique value proposition for new investors, right? Because you have this experience, very unique experience of being in trenches, working 6 years for property management company, from maintenance to management, having on this call and having this insider information on how to do it more efficiently. But also now you have a full cycle. You're going through refinancing. So refinance is already counted as a full cycle real estate deal. And you already have there. Also, you have some experience on seller financing deal, which not a lot of people have. On my first year of being in real estate, I closed on 2 deals, seller financing, 6 and 7 unit negotiated. Even brokers didn't know how to schedule it. And I just listened to Bigger Pockets podcast and I figured out on the go with Google and Bigger Pockets. But I think that's what identify who you are, your personality and your strive to success. And I think raising capital, just getting out there and educate people on your strengths, right? On your, hey, management, this is what you should do, what you shouldn't do. That's how you talk. That's how you don't talk. And this will be interesting start for you. You mentioned to me that you want to start your own podcast and your own talking maybe show. And this will be a good actually angle of action. And now proving yourself as an industry leader, you can get out there and it'll be easier for people to get to know you, what are your strengths, not just talking about it, but also showing examples of your work.
Yeah, absolutely. And I teach people who are looking, who need that little extra help with asset management, property management, and also getting started because, I got started, I got started about 18 months ago in purchasing multifamily. So I just went through A to Z, purchasing. You have large, people who are setting up these communities. They have, these huge, you have a lot of people who are looking to get into the industry, and they are massive. They have 1,000+ doors, which is amazing. And that's where I learned from those people. But it would have helped me personally if I was in it with somebody who just went through it, because they're kind of out of the mix a little bit, which is super helpful. And they'll tell you how they got started, but learning from somebody who just went through it, who just, worked through it helps too. So
most of the time, all those big masterminds, they don't have relevant information. They've done their work, they cut their teeth on good times, and they just went through the cycle. Right. Maybe lucky, maybe they got in good time and they worked on it before. but they didn't buy anything for the last 2-3 years, and now you think, okay, where's the relevance here?
Yeah.
And you know what I hear on one of the masterminds that I was part of, there was interesting talk. I don't remember who was the speaker, but he was saying, imagine yourself on the ladder. You're right now somewhere in the middle with your knowledge and base, but there's always someone below you, so that would like that information, and there's always someone above you that you can learn from. And at any stage of your career development and real estate investor, there's going to be always someone behind you. Even if you buy just one duplex, there's always going to be someone who never bought a deal, and who would love to know how to go from A to Z. Now, in your case, multifamily, okay, you're already right in the middle, and you already tried this and this and this, and there's a lot of people who love that information and get that knowledge.
Yeah, no, absolutely. I had that same exact conversation not too long ago with one of my coaches that, at 44 units, you're nobody compared to the people you're looking at. Okay, I'm looking at people with several hundred units and greater. And I was like, what do I have to offer people? I haven't done it to your level. And he kind of looked at me funny. He's like, you've already done it. You've proven the concept. You're better than most at, you're not better. You're
99% of the people in real estate.
You're further along than those people. So there are definitely people who can learn from you. So that's kind of what kind of gave me the motivation of okay, I have something, things to teach, and I want to teach people. That's a big thing that I've, one thing on my vision board a couple of years ago is I want to teach people and help people learn what I got to learn just from being born, in a family of real estate investors. So I want to be able to teach that to other people. So I'm glad
I think it's a natural progression for us to pass the torch and starting a podcast to talk about it. Like we were motivated. I started my journey from Bigger Pockets podcast, listening and soaking on it and getting my BRR, house hacking, FHA. I learned a lot of stuff from there, and I applied within the next 2 years. But in our case, now we want to pass the torch, and we want to, hopefully inspire other people to get on the same path and be financial free. So listen, tell us about your goals for the next 12 months. What are you hoping to achieve? Besides, I know you have a lot on your plate stabilizing those units, but are you still looking for new deals? I know you have hopes to start a podcast. Tell us about your goals.
Yeah. So on the real estate side, yes, I hope to be at 300 doors by the end of 2026. Yeah. End of 2026, hope to be at 300 doors. So we are actively looking to purchase and partner and work with people, and, looking for new investors and continue to prove the concept and continue to grow. So that on the real estate side is what we're looking for. On the content side, yes, I'm heavily involved in LinkedIn, and right now I'm growing my network there. And also I plan to continue growing my Instagram network, and also or TikTok and all those social media platforms. But to your point, yes, I plan to start a podcast and kind of keep learning from people like you and talking to people like you, and just growing from there. So I have some goals within the podcast, but I don't even know if they're relevant or until I get into it. So that's kind of where I'm at.
All you need to do is start to speak, just bring the knowledge. You have a lot of knowledge to share with people, and there always will be audience for that kind of knowledge. Believe in yourself, and I believe in you. I always hope, we'll start a podcast, and I hope at some point I'll be in your podcast talking about my journey and my experience. And the app that I'm launching, and the writing app, we will have to talk offline about it, and I'll share more about it very soon. But for now, I have the last few questions for you, Hayden. Quick hits, lightning round. So whatever first comes to your mind, let us know. One book or resource that shaped your real estate mindset.
I just read it at the end of last year, and it's Traction by Gino Wickman, and with that, Rocket Fuel by Gino Wickman. Those two books were great. They helped me, and it's not just real estate, but really, really grow in business and leadership.
Love it. Most important trait a business real estate leader should develop.
Just that leadership skills and execution. I really think that separates you from the pack. Being able to execute. Anybody can go write an offer on a deal. Anybody can say they're doing what they're doing, but as long as you execute, you're really pushing, moving the needle forward. And then leading in the space like you do. Talk on podcasts, share your knowledge, things of that nature.
Yep. You got to show example. You got to get out there and really do some work. Like some people preach about their 4 or 5 year ago success and buying stuff, but they have no relevant experience. But now you have, hey, listen, I'm actually keep buying this nowadays in any market and any time given.
Yeah, now more than ever,
makes sense.
Leadership is 100% necessary and very important.
100%. One thing you wish you knew earlier in your real estate journey?
Patience. Patience was huge. Everyone says it, but it's not going to happen overnight. And so really growing. I started in maintenance. I started at the bottom of the bottom, and it's been 7 years or so, 8 years or so since then. And I'm nowhere near where I want or need to be in terms of where I want to be. So patience is a virtue for sure in this industry.
Even though you're saying you're not near where you want to be, but you're still at 10 miles ahead of any other guys in real estate that don't have this experience. And in this game, in real estate specifically, slow is fast. I can hear it more often. And it's good to grow organically. It's healthier.
Oh, yeah.
And there's less uncertainty and there's less, and actually new investors will appreciate it when working with you and talking to you about this stuff.
Building out was really what me and my partner, from day one wanted to do, build out so that we can, get a better foundation so that we can build up bigger and better.
Hayden, one last question for you, man. If someone wants to reach out to you, someone has a deal in those states, cities that you are actively working, or they just want to hear more about your journey, about your experience in management, how can people reach out to you?
Yeah, a couple big places is LinkedIn, just my first and last name, Hayden, Hayden Duer, my last name, or Instagram. And the handle is just my first and last name, at Hayden Duer. Those are the two major places. So yeah.
Love it. And just to be frank, this is how we connected originally, LinkedIn. So guys, don't hesitate to reach out to Hayden. He's very open and very ready to go talking and get this intro calls with you. So if you're active in real estate, don't hesitate to reach out and network. Your network is your net worth, right? That's pretty much it from me. Hayden, really appreciate you pulling back the curtain, walking us through your journey and your deals, like diving deep into the numbers. It's really important. I think that's real value that we provide to our listeners. Yeah. Tons of valuable insights today.
I appreciate you, Alex. Thanks for having me on, and I'm looking forward to continuing to see your journey as well.
Awesome. Thank you, man. And for everyone listening, don't forget to like, subscribe, and share this episode with someone who needs to hear it. And as always, keep moving forward.